Investors don't see Australia as a great place to invest because we're running it poorly, and because of that, the value of our dollar has fallen drastically. And if Apple spent no money on research and development, what do you think would happen to the iPhone? Imagine what happened if the iPhone 3 didn't innovate. You'd have got rid of the flipping thing. Well, that's what's happening to Australia. We're not innovating. We're literally anti-innovating. The cost of goods up, the cost of fuel up, housing up. All these are like human needs. Up. Check this out. $577 billion pumped into the economy, which is 30% of the gross domestic product of the country in that time frame of COVID. I'm Lloyd James Ross, seven-figure investor and entrepreneur, and I've helped thousands of business owners and professionals turn financial stress into success. If you're stuck in old money habits, overwhelmed by investing, or unsure where to start, this is for you. I'll give you the mindset and strategies to take control, grow your wealth, and achieve financial freedom. It's time to make your money work for you. Ever wonder why the Aussie dollar feels like it's worth less every time you travel, shop, or fill up the tank at the gas station? You're not imagining it. The Australian dollar is collapsing, and it's not just bad luck or global chaos. There are real reasons behind why it's happening. And today, I'm going to break them all down for you. In this video, we're going to dive deep into why the Australian dollar is losing value, what a fiat currency really is, the insane money printing that happened during COVID, and how it all ties into inflation, debt, and trust. And we'll look at the day the Aussie dollar was floated, how inflation is baked into the system, and why some are calling it the Australian peso in jest. So if you care about your money, your future, or how to protect your purchasing power, then this episode you do not want to miss, all right? But before you watch this, go back and watch the episode, Why is the Australian Property Market Collapsing? It's our previous episode on YouTube, and there's a lot of incredibly fun, entertaining comments in the comments there. So go check it out and find out why it is collapsing. But we're going to find out why the currency is collapsing in this episode. So before we jump into this completely, and I share some real data with you as to why this is happening in real time, I want to talk to you about fiat currency. Okay, there are multiple types. Currency is just the exchange of value that we do in the world instead of barter. So people often talk about, oh, what happens if the world ends? I'm like, well, we had a bit of a glimpse of that during COVID, and guess what the currency of the day was back then? It wasn't gold, it wasn't crypto, it was toilet paper. So bartering, trading goods and services with each other is actually the original form of economics, okay? So fiat currency replaced bartering because it was just simpler and easier. It's so much easier and frictionless to actually just use paper money to transact rather than say, hey, I'll give you my iPhone if you give me, that tire off your car, whatever it might be, right? It just makes trading goods easy and simple, all right? So a currency is a store of value. It facilitates exchange of value, and it's a measure or unit of currency. So it does all these things. And if it doesn't do those things, it's not really a currency. It's more of an asset or something else completely. So what is fiat currency specifically? It's a currency that has value because the government says it does. So it's by decree. It's not backed by any hard assets. So it's not backed by gold. It's not backed by silver. It's not backed by any hard physical assets, all right? And some examples of a fiat currency are, of course, the Australian dollar, the US dollar called the greenback, the euro, the yen, the British pound. These are all fiat currencies, okay? And of course, it's how we're transacting now. And incidentally, the US currency still stands as the strongest currency in the world, and it accounts for about 50 to 60% of global trade. So very difficult to knock that off its perch. I can't see that losing its reserve currency in the world at the moment. Although the RMB in China, the renminbi, the digital renminbi, probably has the chance next to becoming the global world reserve currency if the USD falls off its perch. But I can't see that happening in our lifetime. But let's talk about why the Australian dollar is collapsing. So the Australian dollar became a global floated fiat currency in the early 1980s. Before then, it was actually linked to the US dollar. So the day it was floated was back in the 12th of December. I think it was 1983. The same year I was born. Great year. So at the time, the Treasurer, Paul Keating, who became the Australian Prime Minister, under the Hawke government, on the 12th of December 1983, they floated the currency, right? So before then, it was pegged to a basket of other currencies. And normally currencies are pegged to the USD, right? But eventually they thought, we need to float this, okay? And floating means it's got its own value, and the value of it is assessed against other currencies. All right, so the RBA or the Reserve Bank stopped setting the price back then, but it still controls the supply of the fiat currency to the market through interest rates. Okay, so why did they float it? 5 reasons. 1, they wanted to modernize the financial world of Australia, because if you have your own currency, it's almost like a maturity in your economics situation, right, in your country. So they wanted to grow and mature into a country that had its own currency. So they wanted to modernize the economics of the country. The other thing they wanted to do, number 2, is they wanted to remove inefficiencies, okay? And they wanted to end the need to interfere with the currency market here locally, all right? And number 3, they wanted to encourage foreign investment. So they wanted to open up capital flow into the country. And so this increases the investment, the trust that investors have when they're bringing money into your currency if you have your own local currency. They wanted to handle trade deficits better. So this allowed the currency to self-adjust to better handle trade deficit. It's like automatically rebalancing trade. So they wanted to do that. And the 5th one is they wanted to stop speculation and around the speculation pressure by removing the artificial pressure from defending the pegs that it was against. So they had all these reasons to do it. And so they thought, we need to do this. We want to mature as a country. We have to have our own currency, right? So that's why they floated it back in the 80s. Now, what's interesting about that is that it's not been backed by anything. And so the US dollar used to be backed by gold. And then they removed this under the Nixon presidency. They removed this from the gold standard, which means that you could just print it infinitely. And the problem with that is you can do the same thing with the Australian dollar. So over time, it's in the nature of fiat currencies to actually fall. And the nature of them to fall is caused by 2 reasons. One is price inflation. So this is where the cost of goods and services actually goes up, and also the supply of the money to the marketplace. So both those things acting at the same time will create some sort of inflationary pressure, which means your money is worth less year by year by year by the exact amount of, or roughly the amount of inflation. Okay, so inflation's really important to understand. So part of this episode is to explain to you why, or importantly, how the Australian dollar is falling in value fairly quickly, all right? So the very first reason why fiat currencies fall is because as I said before, there's excessive printing, all right? So they can supply the marketplace with more money. And of course, if you supply it with more money, there's more of it around, it causes inflation because people have more money to actually spend. So it bids up the price of goods and services, okay? So an example would be, COVID, it was just brutal stimulus. Like it was what's called stimulus-led inflation. So there was, obviously there was fear that by shutting the country down and the world down, that there would be a credit squeeze, meaning there would be an unavailability of credit to continue with business in the economy. And if you have a credit freeze, you can have some serious things happen in your country, like a run on banks. You don't want credit to be frozen, okay? So to prevent that, they opened up the floodgates. They opened up the supply of money to prevent a credit squeeze. And of course, there wasn't really a credit squeeze. All that happened was they just flooded the country with money. They were paying people $750 a week or whatever it was, to just function without a job. And of course, it went to so many people. They took the money, they didn't save it. They obviously went and spent it on shoes, clothes, blah, 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 blah. And they just spent it, which is great for the economy, but it pumped the price of goods and services way up for a couple of years. And we've basically seen, just from that one thing they did during COVID with supply of money, we've seen I feel the Australian dollar lose half its value, I think, in the last 5 years. It's been absolutely insane. Like before COVID, 100 grand was 100 grand. But after COVID, I really genuinely feel like, and you probably do too, it's more like 50 grand. Because if you think of inflation at, say, 10 to 12%, the Rule of 72 suggests that in the 7-year period, it loses half its value. So it's not been quite 7 years, but let's say 5 years, and the currency's lost, I would say, half its value. So if it feels like you're poorer, it's because you actually are from what's called inflation-led, money printing or excessive money printing-led inflation. Okay? The other reason why it happens too is that there's a sell-off in the currency. So if the Reserve Bank of any country drops interest rates, there's less likelihood that people will want to buy bonds in the country. So if there's less enticement of investment dollars into the country, then you will find that the currency itself loses value. So here's what happens economically. When you reduce interest rates to stoke the economy, you actually reduce the returns that people get when they send money into your country to invest. So as rates fall, the value of the currency falls too. But as rates increase, the value of that local currency also increases. So if you think about it, before COVID and as COVID hit, they were drastically reducing interest rates down to 1%. So that massive fall in interest rates meant it sent the currency just falling in value. There's a massive sell-off in the currency because people didn't want to bring money into Australia then to invest because there was very low yields, very low bond yields here. And so it made no sense to pull money in here. So a lot of that caused a sell-off in the currency. So interest rates do have a big impact. And then the other reason too why inflation happens or why currencies fall over time is there's actually a loss of confidence and trust. A lot of fiat currency is based around trust. And so if you start to lose trust in the currency, you can have a collapse in the real value of it. So some really serious examples of this happening, you may have heard of these happening, but eventually what happened in Zimbabwe is they printed so much money that it lost complete trust with the local people that live there, and they absolutely exploded the inflation there, which I'll come to in a second. And the same thing happened in Venezuela, Argentina. The same thing happened in Germany in the 30s. And we've seen in the past multiple examples of what's called hyperinflation from an absolute loss of trust in the local currency. So I'll come back to the data in a second on that. The other reasons why currencies lose value over time is because there's no hard backing. It's not backed by gold or any hard assets. And it's just easy to print. So they can abuse that ability to print the fiat currency, okay? So there you go. When you do it too much, so let's say, for example, your interest rates are super low, but you also print way too much money, you can get huge imbalances that happen, or you can get huge oversupply of a currency in a place, and the currency can effectively become worthless. And so if I look at the examples of when this happened, when the currencies actually became worthless, right, which is a possibility, in Weimar Germany, which is precedes World War II, this is kind of what they reckon caused the rise of Hitler, is that in Weimar Germany, they needed in 1923, they inflated the currency so much you needed a wheelbarrow to buy a loaf of bread. A wheelbarrow of, it was the marks at the time, to buy bread, which is crazy, yeah? Zimbabwe was 2008. It had 89.7 sextillion% inflation. The inflation rate was just like, it was just out of control. They just they set the currency on fire. In Venezuela in 2016, 2021, it became worthless. It was just like paper, yes? And so you can see like it can absolutely lose value in a period of months. It can just dissipate. The value can dissipate, right? It's designed to erode your money. So usually inflation erodes your money by about 2 to 3% a year. And it's a quiet tax on your money. We really shouldn't be living in a world where inflation exists. In fact, we should have deflation. I would prefer deflation to inflation. But somehow the government has conned us all into thinking wrongly that 2 to 3% inflation is what we really want. I don't know how they've conned us into that, but deflation is what we want. We want to actually have more wages increase and the value of things like homes fall in value. And why do we want prices of goods to go up? Like, come on, why do we want our Big Mac to go up in price? We want it to come down in price, and we want our wages to go up. We want to get wealthier, not poorer. But what has happened is that the fiat currency controlled by governments, when it's not backed by hard assets, has given them the ability to print and the ability to keep inflation at 3% a year. Now, I think it's more than that. But what that's done is it's created a quiet tax on the people, and it's made everyone a lot poorer. And I think we just don't want that. But I mean, they've conned us into thinking that's normal. So they go back to a 2-3% a year. Don't worry, I'll come to, in the next episode, I talk about how to overcome this stuff. But so it's designed to erode your money. What's inflation like in Australia? So these are the stats from Australia. Currently, CPI stands for Consumer Price Index, and it's where a basket of goods from groceries to rent and fuel and so forth is put into a basket of average good prices. And over the course of a year, CPI, Consumer Price Index, assesses the increase in price from the basket of goods in 1 year to the next year. So if CPI is 3.6%, right? Then that means that the basket of goods for the next year has gone up by 3.6%. So the current inflation in Australia, they say, is 3.6%. However, it was up to 8% because of COVID, because of all the massive money supply they put into the economy for particularly no reason. They should have not done what they did, but it is done now. So it's come down, right? But that's the current inflation rate. The Reserve Bank of Australia targets about 2 to 3%. But again, that's a quiet tax on the people, right? And of course, they're anticipating if oil goes up, if there's more war, if there's more inflation that's caused by that, then they may increase rates, and that can have a huge effect on the economy. But for now, it seems like inflation's under control, but I don't believe it. Again, in the episode I did on why the Australian property market's collapsing, I talk about this thing called the Maxi Bond index. That's a real personal life experience and I bought one the other day too, $6. And by all accounts, the inflation rate is not 3%. And you probably agree with me. And if you don't agree with me, put it in the comments below. If you agree with me, pop in the comments below. I'd love to see what you think about that. But what's driving so here we go. What's driving inflation in Australia right now? There's probably 5 core things driving inflation. One, COVID shortages. So there's higher price on goods. So there was actually, we couldn't import as many goods as what we used to. So like, remember when like boats were going up in value and cars were going up in value? It's like, well, it's complete opposite to what you realize. So there was higher price on goods that caused inflation. Rising energy and fuel costs, that's still causing inflation. It's crazy to think how much fuel costs for us now, and diesel, it kind of doubled. I remember I used to be able to fill my car up for like $100. Now it's like 160. So I'd say there's 60% inflation on fuel, which is gnarly in 5 years. So that's over 10% a year. We've got number 3, wage pressures. So we do have because of the aging boomer population, we have a shortage in certain labor markets in Australia, and that caused wage inflation. So you look at all these inflationary pressures happening at the same time. Housing and rental costs, because we like to keep interest rates ridiculously low for too long because we're idiots. We had housing and rental costs go massively up. So we had rental inflation and price of housing inflation. So these are all important things. You're going to look at this. This is like the cost of goods up, the cost of fuel up, the cost of wages up, the cost of, like, that's for businesses hiring staff, you've got to pay more. Housing up. All these are like human needs, up. And of course, you add in the government stimulus that I spoke about. They pumped in, check this out, $577 billion pumped into the economy, which is 30% of the gross domestic product of the country in that time frame of COVID. Like, they just chucked the Australian dollar on the fire and shred it, just burnt it. It's just wild. And then they kept the JobKeeper on for 3.8 million workers for way too long. Remember, like, they were paying everyone $750. I didn't get mine. Did you get your $750? I never got $750. Where's my $750? Just quickly, if you're ready to take control of your finances but feel stuck on where to start, I have a solution. My book, Money Buys Happiness, simplifies investing and wealth building with practical steps to help you achieve financial peace. Get your copy via the link in the show notes, and let's get your money working for you. Now back to the episode. You know, a friend of mine, I had him on the show, Simon Beard. He owned Culture Kings, and he founder of Culture Kings, and I've got him on the show. Go back and check out the episode of me interviewing Simon. And he said, you know, he set up to sell his business before COVID, but it just so happened that the government stimulated the economy with COVID money. And he said that really went straight into the hands of his ideal customer, which is young kids. And they went and bought hats and shoes and stuff from Culture Kings. And he said his business just blitzed. And he said he exited perfectly and he sold for $600 million. So that's an example of how sometimes, you know, this type of thing can also benefit business owners. But he also said that it was just wildly well-timed. And go check out the episode too. But this is what happened during COVID, okay? Why is the Australian dollar falling? What's causing the collapse of the Australian dollar? I'm going to give you 10 real core reasons, all right? So get ready and buckle up for this. The first reason is this: the Reserve Bank of Australia versus the Federal Reserve of America. So right now, the Reserve Bank of Australia has a cash rate at 4.1%, and the federal funds rate is higher than that. So the USD federal funds rate's at over 4.5%, and they're increasing, and they look like they're going to hold rates where they are, but we just drop rates. So the fact that the Reserve Bank of Australia is dropping rates is causing our currency to fall in value, and the fact that the federal funds rate in America is keeping them steady or maybe even increasing them it's going to create more demand for the US dollar. And because we measure the value of our Australian dollar against the US dollar, we're seeing it fall against the greenback. Okay, so there is this battle against the two reserve banks at the same time. We're reducing rates, creating Australian dollar weakness, and they're keeping rates the same or increasing them. It looks like they're not increasing them yet, but they might. And it's creating value in the US dollar. So you can see that's the first thing that's creating this weakness. That's why when you go to America, I've been to America, I'll be going to America for the third time this year. You feel like a poor person as soon as you walk off the plane. You get off the plane and you've lost half your purchasing power. I was at the airport recently coming back from the States, and we're in a long line and we're all coming through the gates to go through immigration. There's an American guy, big, loud American guy from Hawaii was there, and he was, you could tell he was from America. And I said, how's it feel to be a millionaire? He's like, what are you talking about? I was like, you just got off the plane in Australia. You got US dollars. You're a flipping overnight millionaire. So it's a really challenging time to go to America right now because we have huge weakness of the Australian dollar versus the USD, okay? The second reason why the Australian dollar is collapsing is this. China's economic slowdown. Our currency is very driven by resources here. So like our currency is heavily dependent on the price of iron ore, the price of coal, the price of all the different metals that we send overseas. And so we're very resource-driven currency. And so when China pumps and the economy is killing it over there and they're importing a ton of our resources, the value of our dollar is a lot higher. So the fact that recently too, because of the tariff war that is happening with the US and China, exports dropped out of China like 34% year on year. So it's a huge shift in how much they're consuming there. And of course, their property market completely collapsed. They were building ghost cities, and those ghost cities actually, turned into just wasted steel and all this incredibly wasteful resource. And we were pumping China with so much iron ore to build all these buildings, and that's started to come off the ball now. Like a lot of the property sectors come off and decreased. So the fact that China's slowed down means there's less demand for our commodities here, which means there's less demand for the Australian dollar. Does that make sense? So that's the second reason. The third reason why the Australian dollar is collapsing is because commodity prices here are falling across the board. We've had a massive fall in lithium. We've had falls in iron ore price. The spot iron ore price has fallen. We've had, thankfully, gold's increased in value, but we've had a lot of commodities in Australia fall away because the demand for those commodities, not just in China, but other areas around the world, has actually slowed down because of a slowdown in global economic growth, okay? There's been very sluggish growth in the world's economy, which means, if Australia does have the richest resources in the world. Recently, they just discovered I think it was $6 trillion worth of iron ore deposits here, some crazy number. I think it was 6 trillion. I mean, look at how powerfully rich we are we're a very rich resource nation. It's just that the growth around the world has meant that, hey, we don't need as many resources from you, Australia. So of course our currency falls. The fourth reason why it's collapsing is this. There's sluggish wage growth here in the country. In fact, we've been in a silent recession for the last, 3 years, I think. I mean, it's been like a quiet recession, because a recession is when you've had 2 successive quarters of negative GDP growth. But we've been so close to negative, we've just been we're teetering on negative. We're like 0 point something. It's just been teetering on no growth. We've been in a bit of stagflation where nothing's actually happening. So we've had sluggish wage growth. We've had more consumer spending. And we've really not had any productivity gains. And so if you're not a productive country, why would your currency be valuable? It wouldn't be, right? So you're seeing this, the fact that we've got pumping out Social Security so much, we're pumping out NDIS, we're pumping out, we're providing poor energy policy. All these things that I spoke about in the other video on why the Australian property market's collapsing is the same reason why a lot of our currency is collapsing at the same time, right? So there you go. Cautious consumers means there's a weaker domestic economy. So we're not spending on parts of the economy we need to spend on for a productive outcome. We're pumping up housing. We're really not spending when we need to spend, right? Number 5 reason why the Australian dollar is collapsing, debt to GDP, 111.5% in quarter 3 of 2024, right? It's one of the highest globally. That means that we've got the most debt to GDP. In fact, we've got the highest household debt to income or to GDP in the world. We do. We have the highest household debt. I think it's something like 200%. It's a whole 100% higher than other countries. It's like we're just soaking in debt, which tells me that a lot of the monetary supply that's coming to the economy is just pumped into land. It's a weird thing. We have this saying in Australia: we dig holes and buy houses. That's our whole economy. We dig holes, buy houses. And unfortunately, the world doesn't want what we're digging out of the holes as much, so the currency's falling. And of course, if we're pumping up property and increasing the inflation in that area, we're also hurting the currency, okay? Number 6 reason why the Australian currency is collapsing is because we also have an account deficit. We have a trade deficit. We're 14.7, check this out, 14.7 billion in deficit Q1 2025, right? That's a current account deficit. That's a trade deficit on the current account of 14 billion. So we've got a net capital outflow from Australia. And the reason for that too is because our interest rates are too low. So that is boding not well for the value of the Australian dollar. Okay. Number 7, the global risk off sentiment. So global risk off means people are not open to investing in what's called risk assets. So things like tech stocks and so forth that generally are high growth, they call that risk on. And risk off sentiment means we're not prepared to swing at those riskier assets. So what we want to do is we want to go back into non-risk assets. Okay, so there's a global shift in risk off sentiment versus risk on, and the Australian dollar is a risk on currency. And so if there's no risk on, then the value of the Australian dollar is falling. Okay, and so basically in uncertain times, so when there's risk off sentiment, people they run to the US dollar, they run to the Japanese yen. They run to other currencies that are more strong than ours. They run away from the Australian dollar. That's what happens. Okay, so what we want is to have risk on, but that's not happening because there's wars, there's fear of inflation, there's all these fears happening in the world right now, and it's running people to the US dollar. That's why the US dollar has gained so much strength, and the Australian dollar has lost so much value. Okay, number 8 reason why the Australian dollar is falling in value because the forex market. So there was large traders holding about 8,500 net long Australian dollar contracts in earlier this year. And so that shows you that there's a lot of volatility risk. And so if there's a lot of volatility risk in the currency, generally speaking, it's not well sought after. It's too risky for people to hold, so they don't want to hold it. So the demand for Australian dollar falls, okay? Number 9 reason why the Australian dollar is collapsing is geopolitical tensions, right? What's happening right now is, Iran and Israel are at war effectively overnight. We just announced they're in war. And so that's huge, I would say, destabilization of that region, not to mention the fact that Russia and Ukraine are still at war. So we've got 2 wars happening. We've got uncertainty in China in terms of the economy. We've got huge uncertainty and civil unrest in the United States. There's a lot of protests happening around, the ICE removal of illegal immigrants there. So massive uncertainty, particularly in the Asia Pacific area where our currency lives. And so there's a huge amount of investor caution. So they're not really wanting to put their hands on the Australian dollar. They're like, nah, take me to the USD, take me to gold, take me to all these not, risk off type currencies and assets. And so that's causing this fall in the value of the Australian dollar. And finally, number 10, weak business investment. In Australia, we don't have a lot of people wanting to invest in our country because we don't invest well in new businesses. We don't invest well in innovation. I saw this article pop up the other day. It annoyed me. It was like 2 days ago. And Anthony Albanese, the Prime Minister, said that Australia is a leading tech country. I just want to punch it. What? Leading tech country? We can't even get our NBN sorted. We're terrible at adopting technology. We're slow. We're way out of date already in AI. We're not really. We used to be tech innovators. Australia had some cool inventions. We invented the torpedo. We invented the Victor lawnmower. We invented the Hills hoist clothesline. We're innovators. No, but we used to be more of a manufacturing-led innovation economy, but we have pretty well just destroyed all manufacturing in the country. We're not tech innovators. We don't invest in businesses. In fact, our banks do not lend well to businesses. They are more about lending to property owners. And so what's happened is because we're just become property sycophants, property like addicts. All we've done is bid up our own land price with our money. We're a bunch of idiots. What we need to be doing is spending money on business innovation. And so we've been hit hard with capital slowdown into Australia for investment because we have soft growth. And of course, if you have a country that has not innovating, imagine a company, for 1 second, just imagine there's a company, a business, and it spends no money on R&D. So no money on research and development. If Apple spent no money on research and development, what do you think would happen to the iPhone? It wouldn't have innovated since the iPhone 3. Imagine what happened if the iPhone 3 didn't innovate. What would you have done? You'd have got rid of the flipping thing. Well, that's what's happening to Australia. We're not innovating. We're literally anti-innovating. All we're doing is taking the money we got and chucking it to non-productive parts of the country. We're like, why isn't our country working? Because we're not innovating. We're not spending any money on R&D. Zip. In fact, we're borderline going to lose our security agreements with the United States because we're run by a bunch of muppets, frankly. And you don't really have to. It's gross incompetence is what it is. We're so attached to doing what's right with all these woke agendas that we cannot even start to look at how our country is going to live for the next 50 years. If we don't innovate in Australia, we're not going to have any capital investment in Australia. I mean, what if you think about it? If Australia was a company and a business right now, truthfully, and you know that it's not innovating, and all of its poorest, non-productive employees. Imagine your business. You got all these employees, and all they do is just move paper around all day. They don't actually do anything productive, and a lot of them are sick and tired and are fat and overweight. And you just give them all this money out of the profits, and none of them producing any sales for your business. What do you think would happen to your business in the next 10 years? It'll be gone. It'll be gone. What do you think is happening to Australia? If we're not innovating and spending on money on R&D, if we're not actually incentivizing and paying our highest, most productive talent, if we're actually incentivizing to actually do less work, so we're actually putting too much into the Social Security, if we're not innovating our energy policy and we're making it even more difficult to actually pay for energy. In fact, if you look at your energy bill of the last quarter, tell me, how is it that a country with the most land has the greatest housing shortage in the world? And you tell me how the country with the most resources and energy and hydrocarbons in the world is having the highest energy prices in the world. How? It's because the business that we run here is being run by an idiot. And it's good. Warren Buffett says, invest in a business so good that even an idiot can run it, because sooner or later one will. So if you look at Australia as more of a business, as an example, is that strong in resources, wonderful. Light in population, wonderful. We actually have almost no one lives here. Massive land mass, wonderful. You would think, based on that, we would be the richest country in the world. And the value of our Australian dollar would be way above the US dollar. But the truth of the matter is, because we're running it poorly, investors don't see Australia as a great place to invest. And because of that, the value of our dollar has fallen drastically and is sitting around about 0.649 US cents to one Australian dollar. And the history of the Australian dollar has been, on average, will sit at about 75 cents. So we're oscillating around this weaker Australian dollar. It's collapsing further and further and further and further from inflation than you can possibly even keep up with. And that's why it would feel like right now, despite wage increases, despite the fact that having some successful years in your business or your job, and you're like, why am I feeling poorer? And it's because of these things happening all at once that are collapsing the Australian dollar. Okay, so they're the 10 reasons why the Australian dollar is absolutely collapsing. They're all very succinct. They're all happening at the same time. So yeah, a couple of things happening. One, you're going to feel poorer because you effectively are from inflation. And two, if you assess it against other currencies, we're also falling. So we're falling in the foreign exchange rate of other currencies, and we're also falling from the inflation rate of our own currency. So two things happening at once. So it's not a great time to be investing overseas, that's for sure, for the Australian dollar. But it can flip and it may flip. But what we do need is we need a complete flip of the Australian economy with better leadership. But that's out of our control. So what is in our control? What is in our control? How do you protect yourself from the inflationary hit to the Australian dollar, and how do you protect yourself against you losing wealth over time if you're earning Australian dollars, all right? And that's a great question. So it's not falling randomly. It's a result of all these unchecked spending, rising debt situations, and a system designed to quietly erode your wealth, right? But what you have to understand is it's happening, and you can implement steps yourself to actually prevent it, all right? So in the next video, I'm going to break down exactly how to protect your money during inflation, right? From smart investments and ideas that are simple, that you can follow, model, and they're well documented and well known. And I'm going to go through exactly what has happened to countries that have gone through hyperinflation, what actually happened to them, and how hard assets can prevent you losing wealth if that happens to the Australian dollar, all right? So if this video gave you value, hit the like button, hit the subscribe button, share it with someone who needs to hear it, and don't miss the next episode because I dive deep into how to prevent your money from eroding away in the next one. So go check it out. Knowledge is power, but only if you use it. See you in the next episode. Thanks for listening to Money Grows on Trees. If you enjoyed the episode, leave a 5-star review on Apple Podcasts and Spotify and subscribe to us on YouTube so you never miss an episode. And if you're serious about building wealth, make sure to check out the links in the show notes and follow me on all social media platforms at Lloyd James Ross for more. See you in the next episode.